This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
China's fuel oil imports cooled in May after hitting multi-year highs in April, data showed on Thursday. May imports totaled 2.15 million metric tons, about 441,180 barrels per day, 27% lower than April and 19% down from a year earlier, according to General Administration of Customs data. Demand retreated after prices rose in line with firming cracks of high-sulfur fuel oil, HSFO, in Asia, trade sources said. Cracks for 380 CST HSFO rallied to their strongest in 9 months towards the end of May, data from LSEG showed.
Brent oil futures were little changed in Asia on Thursday, hovering slightly below 7-week highs, as the market weighed geopolitical developments in the Middle East while waiting for U.S. inventory data. August Brent rose 9 cents to $85.16 per barrel by 0630 GMT. Meanwhile, U.S. West Texas Intermediate Futures, WTI, for July, which expire on Thursday, dipped 15 cents at $81.42 per barrel. There was no WTI settlement on Wednesday due to a U.S. holiday, which kept trading largely subdued. The more active August contract fell 15 cents to $80.56 per barrel.
Moving on to the top news in the energy sector.
Global fossil fuel consumption and energy emissions hit all-time highs in 2023. Even as fossil fuels' share of the global energy mix decreased slightly on the year, the industry statistical review of World Energy Report said on Thursday. Growing demand for fossil fuel despite the scaling up of renewables could be a sticking point for the transition to lower carbon energy as global temperature increases reach 1.5 C, 2.7 F, the threshold beyond which scientists say impacts such as temperature rise, drought and flooding will become more extreme. We hope that this report will help governments, world leaders and analysts move forward, clear-eyed about the challenge that lies ahead, Romain Debar of consultancy Kearney said.
Onshore fuel oil stockpiles at key trading and storage hub Singapore built for a fourth straight week, official data showed on Thursday. Inventories rose 19% to 22.81 million barrels, 3.59 million metric tons, in the week ended June 19, reaching a 17-week high, Enterprise Singapore data showed. Bunkering demand has been tepid in the week, while at the same, broader supplies to Asia recovered, market sources said. On the exports front, top destinations for fuel oil outflows from Singapore's onshore tanks included China, Philippines and Bangladesh in the week ended June 19. Next, we have the top news in metal markets. Copper prices edged up on Thursday on hopes of improved demand in China following recent price drops and supply concerns, though capping the upside were a stronger dollar and rising stockpiles. 3-month copper on the London Metal Exchange was up 0.1% at $9,794.50 per metric ton by 10:12 GMT. Top metals consumer China left its key benchmark lending rates unchanged on Thursday as Beijing's monetary easing efforts continue to be limited by narrowing interest rate margins and a weakening currency.
Iron ore futures prices were stuck in a tight range on Thursday as traders weighed high portside inventories and prospects of crude steel output cuts in top consumer China against production resumption at some steelmakers. The most traded September iron ore contract on China's Dalian Commodity Exchange ended daytime trade 0.36% lower at 824 yuan and 50 fen, $113.56 a metric ton. The benchmark July iron ore on the Singapore exchange was down 0.33% at $106.95 a ton, as of 07:05 GMT. It climbed more than 1% in the morning session, partly helped by a weaker US dollar.
We will now look at the top news in the agricultural sector.
China's soybean imports from the US accelerated in May with a 156% surge from a year earlier, data showed on Thursday, while supplies from Brazil shrank for the first time this year amid flooding disruption in the South American country. The world's biggest soybean buyer imported 1.27 million metric tons of the oilseed from the US last month, compared with 494,103 tons in the same month a year earlier, showed data from the General Administration of Customs. That was still far less than imports from Brazil at 8.8 million tons, which made up the majority of the 10.22 million tons of soybeans China imported in May.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.